Hello, 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 and welcome to Entitled. I am Bernie Espinosa, along with my co-host
David Bellinger. Hey, everyone.
Yes, yes, yes. And Entitled is where we talk to the real estate thought leaders, practitioners, and entrepreneurs of the real estate space. And as always, our fun name for our podcast,
Entitled.
Entitled, because
Wink, wink.
David and I work for Lawyers Title, which is an F&F company, and we work in the title industry.
Yeah.
So Entitled.
If you
welcome.
know, you know.
If you know, you know.
Yeah.
So we have a really awesome guest today. One of the things that we're seeing a lot of, it's not new, but we're seeing a lot more of creative financing. And again, in the real estate industry, people are always looking for great ways to purchase properties. And one of the things that we've been battling in the last several years is interest rates.
Yes.
I mean, it's been a big factor. And so today we are going to meet with Ryan Leahy, who is the CEO and founder of More Seller Financing, and More stands for More Offers for Real Estate.
Well done.
Yay.
We nailed it.
We nailed it. We nailed it. But no, Ryan, we're really excited to have you here. One of the things that I think is super entrepreneurial about what you've put together is not just the solution platform, but the education and the resources part of it. 22 years in lender financing and over 4,000 transactions closed. And we get to have you on our fun podcast today.
Yes.
Yes. So
Excited.
welcome.
Well, thank you for having me.
Yeah, absolutely. I hope we did you justice on that little intro there.
Yes, better than I deserve sometimes.
Yeah. Well, let's dive right in. Talk a little bit about, I know that you've come from a traditional financing background, and maybe talk a little bit to our audience about that, and then how you kind of went from that to creating the More platform.
Yeah. Thanks,
That sound
Bernie.
okay?
So being in the mortgage business for the last 25 years, and we had the unicorn years. I've seen lots of different ups and downs in the market. We had the mortgage meltdown and the Great Recession, and so ultimately the cycles were much shorter to get back on top and for corrections. So ultimately, the industry didn't really have to innovate through the previous three corrections that I've been through. For the first time after, through what I like to call the unicorn years of 2019 through 2022,
Yeah.
where, everybody was out buying a house, we built a team up of over almost 100 folks underneath us. And going into March of 2022, we all know what happened. Interest rates started to rise, and not only did they rise, they rose rapidly, and they got to a point that really nobody saw coming, almost topping out at close to 8%.
Right. Which
And by
there was
December of
another era in real estate where 8% was not bad.
Yeah.
Just that most people that have been in the business have been in it for less than 8 years. Most pros today, and they'd never seen the mortgage rates that we saw.
Well,
in
not
the
only
last 5
did they
years.
not see the high rates, we just finished refinancing for unheard of low rates.
Yeah.
So it was the combination, right?
Yeah, you definitely had the shock and awe on
Yeah.
both sides, right?
Yeah.
So in December, when rates had peaked to some of their highest, our team had gone down from almost 100 to 11.
Wow.
And we saw a massive contraction in that. And for you guys both run teams and own the companies, and so that takes a piece of your soul. When you've got to see a lot of the people that you love, like family, go through that, and of course us to go through it.
Right.
And I was talking, so I'm third generation real estate, and back to Bernie, what you were saying, I was talking to my mom. And I said, Mom, I'm looking at 4,200 loans that we've closed over the last 4 years, and not a single one of them, except for a very small handful, was below, was above 3.5%. All of them were below 3.5%.
Bananas.
I'm talking to my mom in December, and she was asking about the holidays and if I was getting in the holiday spirit. And I was like, absolutely not. Like, this is brutal. And so I shared that with her. I was like, I don't know how the market's going to come unlocked. And she goes, honey, without skipping a beat, honey, your grandmother and I made the family wealth from 1978 to 1987 doing seller financing and seller financing wraps. She said, you see, highly qualified and qualified buyers didn't go to banks in order to get a loan. We went directly to the sellers. And you see, she said back in the 70s, the sellers, most of them got a 7 to 9% interest rate on a 30-year fixed rate mortgage. And we just went to them and said, hey, we'll give you 3% over what you have, which was better than the 15 to 18%,
Yeah.
which that the banks were offering. And so I was like, gosh, seller financing, like, yuck. But okay. And she said, we weren't as resourceful and we didn't have the internet back then, but we did very, very well. And I'm sure you'll figure it out. So take
That
heeding
really
mom's
quick. I mean, that's
advice.
an awesome story, right? To be able to interlace your mom's success story in this moment, right? This snippet in time where, of course, it's always mom that, brings you back down to like,
And to bring back the same issue,
same-
right? In a
same
completely
industry.
different time.
Yeah.
Yeah.
That was awesome. That's a great little nugget.
Well, thank you. What's fascinating about it, when I started researching, I was like, okay, well, let's take a look at this. I mean, seller financing, since I got in the business, I started in 2002, and interest rates had just fallen from 9% to 6%. And it just so happens that from 2002 to 2022, that era was when sellers finally in the mass drove started going to banks in order to get long-term fixed 30-year fixed interest rates. So you see, with a lot of the research that you can find from about 1979 to right around 1998, a tremendous amount of seller financing took place across the country. So much so, actually, in 1983, San Francisco, 1 in 3 transactions was actually a seller financing wrap in the state of California.
Wow.
And
Smart,
so
because that's how we all always do, right? Like we always find a way to get things done, no matter what no matter what the rules and regs are, we can find a way to live inside those and still make transactions happen.
Yeah. So then once I was like, okay, well, this maybe my preconceived notions, because in 2002 to 2022, seller financing actually took on a bad rap. So most agents haven't heard, or even if you Google things about seller financing, it's kind of negative because it's been used really to sell to people either from a predatory lending piece or, selling to people that probably shouldn't be homeowners, right? That had really the dream of home ownership. And so, but if you actually took a look at if there were highly qualified sellers that have really low interest rates, and they have highly qualified buyers that are just sitting on the fence waiting for rates to drop, well, who says we have to wait on the Fed?
Right. That's what I love about what you've put together. I mean, I guess like I hear the drum roll of like Ryan's amazing platform. But I think the creativity of it based in something that's already happened, but a different way of doing it now to kind of fits with what's happening trend wise and with interest rates, and the ability, I think, to make a transaction happen with an alternative resource. So just this week alone, I don't know if you guys saw it, but Inman just released an article that said that the lowest number of cash purchases since 2020, all-time low. Yeah. And people are holding on to their cash. They're looking for alternative resources. And through a seller carryback platform is an alternative resource, which based on what you shared in another meeting, Ryan, I love the different options that you have and also potential for a lower interest rate than what the market's bearing.
Yep.
You hit the nail on the head. I mean, we had to innovate buyers sitting on the fence waiting on the Fed. Like, how do we transact today? And we also had to innovate, how do we help sellers leave their current 3% mortgage or 3.5% mortgage?
They don't.
And so we took the best practices of conventional lending. I just married them with the best practices of seller financing. And what we did is we partnered with people that specialize in seller financing that have done seller financing and seller financing wraps, closed more than 25,000 of these transactions. We created some veil of protection around the due on sale clause and due process in order, A, for education, B, for marketing. We help the agent market the property with, we ask agents, do you think you could get more qualified buyers to your listing if you could legally market a 4.99% on your resale?
That's amazing.
or a 3.99% on your resale. And they're
Right.
like, you mean I can compete with new construction now? And I said, right. Let's take a look at, does your seller actually have a current underlying mortgage that is really low, or is their current home paid off? So that's really where we started tackling this, is how can we help agents with their core business and help, have the listing stand out amongst all the listings that are in that price point in that neighborhood. In a $800,000 price point. By the way, our target market where we've been the most successful is between 800 and 3 million.
Okay.
Right? Most people think of seller financing and they think about $90,000 mobile home,
Right.
or $300,000, type of first-time home buyer situation in some cases. We have found it to be highly successful in a couple of different buyer segments that either it's unlocking self-employed home buyers, because the true
Oh,
innovation
yeah.
Yep.
on this
Smart.
is 1 in 4 home buyers are now declined. They have 20% or more down. 1 in 4 home buyers have income that no longer qualifies for a traditional mortgage in Fannie Mae, Freddie Mac, or even the conventional or even the expanded guidelines, like business bank statement, et cetera. Because as we know, inflation is here. And a lot of people have side hustles, whether if it's an Amazon business or they're
Right.
playing, music and gigs on the side, or they're an Uber driver or whatever that looks like. And that income many times is not qualifiable for a mortgage.
That's so funny
And
that you
so
see a lot of people who rent that make a lot of money.
Right.
Like, some of these influencers
Yep.
and whatnot, like some of them are making millions of dollars and they don't have ways to really show their income, and they prefer to rent these days. I
Yep.
mean, it's
that's
running
right.
rampant. Like,
That's right. Or you have people that are in the crypto in the entire crypto space. It's
yeah,
not lendable,
yeah,
right? And I'm dealing with a guy yesterday that has $20 million in crypto, has been declined by 3 lenders, and we're going to bring a $5 million transaction together for him.
that's
Wow.
amazing. What's the interest rate on that?
Yeah, exactly. So, well, when we do it, we're going to talk to the seller about giving him a 5% rate for somewhere between 3 and 5 years. And
That's
he's going to
awesome.
put $2.5 million down.
So
So,
on that seller that's going to give them 5%, what's their current rate at?
Yeah, how does that piece
that
work?
we haven't identified. We have 3 of them, but usually these sellers in those price points have interest rates between 2 and 3.5%.
Okay.
So the seller's going to make a spread
Yeah.
on this. And we have some ultra luxury that we were looking at. We had a $20 million property in Austin. The seller had a 2% rate on $10 million, and the buyer was willing to pay 5% on the $10 million. He was going to put 10 million down. And the seller was going to make $96,000 a month in spread after
Wow.
an arbitrage after they sold the home. And so there's lots of amazing ways. And of course, we're on the phone with their CPA, their attorney,
Right.
the guy that did the loan. I mean, those are the transactions we're doing, but we're also doing them for investors that are currently buying houses, and they're putting 20 or 25% down. And whether if they're doing it traditionally and they're getting a 7.5% rate, or if they're doing a DSCR at 9%, well, how many more houses do you think that investor would buy if they could go get a 5% rate for 3 to 5 years from a seller,
Right.
or a 6% rate?
Mm-hmm.
Or what about all the non-warrantable condos
Yeah.
that are stuck
Yeah.
across the country?
What is the typical time frame on these, Ryan?
So it's interesting. Sellers like 3 years or less,
Okay.
and buyers like 5 years or more.
Of course.
Okay.
Right.
So we help bring the transactions together legally, compliantly, and enforceably in all 50 states. We pre-approve the home buyers. Every single home buyer, even if they're pre-approved by a different lender, is required to get pre-approved by us or our preferred lender. And then once we have that information, we go to the seller and we talk to the seller, because the seller's the bank.
Right.
And we give the seller all the pertinent information that they need, along with the listing agent, in order to make a decision. Do they want to do this loan? And we make a formal recommendation as well. Do they want to do this loan? Under what circumstances do they want to do this loan? And the terms that they want to do this loan. And then we'll go back to the buyer and start negotiating that. And so that's what we do. And generally, seller financing most of the time is full price. So then we will help with the agents Once they agree on a sales price, then we help with negotiate the terms between the buyer and the seller. And we've done them as short as 6 months, and we've done them as long as 15 years.
Oh, wow.
Wow.
So it's really dependent on what's the seller's tolerance for that specific home buyer,
Right.
and where can we bring it together where it makes sense.
What are
And
some of
ultimately,
what are the
it's a win-win.
safety, what are, I love it. Like, what are the safety, measures? Like, what is the get out of jail free card if somebody doesn't perform?
Yeah, great question. So, I mean, we have some, first off, it's really interesting. Here's what we found, and I'm going to answer, I'll get to that. Here's something we really found, and that we challenge agents. We ask agents to be open-minded, because statistically, we've been doing this for 2.5 years. And we've been engaged a lot. And what we found statistically is 1 out of 100 agents will actually introduce us to their seller. But on the other hand, 53% of our sellers sign up for our program.
Oh, interesting.
So you have a massive disconnect between what the agent has a preconceived notion of, because they've heard terrible things about seller financing in their office or amongst their, generally the notion is seller financing is bad. But what if it could be done properly? What if it could be done in an eyes wide open transaction where everybody knows what's going on? The seller's highly qualified, and in the event that the buyer defaults, the seller doesn't have a problem stepping back in and paying the mortgage. What happens if we make sure the buyer has enough reserves for when they lose their job. Now, do people still get divorced and car crashes and, all the things that happen in life? Yes, those things do happen. But we have built in deed in lieu of foreclosures. We have built in cash for keys. We've built in a servicing company, so all the payments are tracked properly, and then all the tax forms are done properly. When this is done correctly, the sellers can actually minimize their tax liability and their capital gains, because it's called an investment. Excuse me, it's called an installment sale.
Okay.
And so it can really help bring a transaction together, where sometimes these houses are sitting on the market for a very long period of time, because the very, very large majority of all of our transactions, except for a very small handful, are all self-employed, highly qualified self-employed home buyers that are just not, and they're pre-approved, but we pre-approve them on business bank statement loans or P&L loans, but they're pre-approved at 8%, let's call it.
Okay.
And they're not home shoppers at 8%.
Right.
Whether if they're buying a $750,000 home or they're buying a $3 million home,
Yeah.
it's irrelevant. They're just not home shoppers at 8%. But when we advertise, the seller advertises 4.99% with 25 or 30% down, they have that money,
Right.
and they have the income that we can verify to back it up with the job history.
Yeah. Well, it's so funny because you almost need the platform in order to create the buyer, right? So they're not shopping at 8%, but they would buy if it was, a better rate. And so I feel as though a few things that you've mentioned, 54% of the sellers that you speak to want to use your program, and only 1% of agents actually realizes that they should be bringing this into the conversation. So obviously more agents need to know and understand this. And then, I'm always a proponent of I don't need to know A to Z. I need to know the top level talk track so that I can connect them to the professional, which would be you. And so, how are you going about finding, because I love this idea of you could sell a house faster.
Yeah.
I mean, the reality is
You just opened up your pool.
You just opened up the pool of
Yeah.
people and the
Yeah.
conversations. And for the agent, you're expanding the sphere of contacts that you potentially have, because you're advertising 4.99 or generating curiosity. So your win this is what I think is cool. Your win is connecting with realtors.
You got it.
Yeah.
Our job is to empower agents to get more listings. We have so many agents that use our program, and they're like, Ryan, literally, I just got a call 3 days ago. Ryan, I won this $575,000 listing amongst 3 others. There were 4 agents being interviewed, and I won it because I told them that in the event they wanted me to have another marketing tool other than a price drop, I had a seller financing specialist team that could show them how to do seller financing. And at any point, we can add it out the gate, which we recommend, or we can add it at any point in time during the process.
Right. Well, as a really great agent is going to represent themselves as a gateway to information, not the authority of what to do. And that's how they win. If you're a realtor, you're going to win by saying, here are different roads that you could go down. If you like this button, I can push it, open the gateway, and connect you to the person to talk to, right?
Right.
Yeah.
We only ask for the introduction. That we just want to educate everybody enough for the introduction. And we just have the agent send us the address prior to the listing appointment. And we give them a one pager to insert in their listing presentation on their iPad. So yeah, that's specific to that home.
That's awesome.
Ryan, do you have any agents in the territories you guys are doing loans that are actually using this as like a not once they get the listing or the listing appointment, but more of like a farming tool? So let's say an agent is marketing to, a smaller neighborhood, 300-400 homes. Are they able to send you a list of 300 or 400 homes and see where this is a good measure and go out and purposely knock on that door?
We have not had anybody do that, but we do have that capability to provide that information.
Okay. And then answer me if this is a short answer, maybe it's not. So whatever it is, 3 years, 5 years, 2 years, whatever it is, right, on the seller financing. So is there some bullets on at that point? What is the process for the seller at that point?
Yeah. No, thank you. Great question. So when the term is up, what happens? So remember, we're a lending company and we work with lenders that they get enrolled and they become a preferred lender of the platform. So the lender's job is to call that home buyer every 3 months and check in with them and just remind them you're on a short-term note, seller financing note. Today's interest rates are X. Would you like to refinance?
Oh.
Want to make sure that you understand the time clock is ticking. You had 3 years, now you're at 2. Now you're at 2 years, 1 year, 9 months, 1 year, 6 months, et cetera, right? Let's just say you get to the end and maybe the buyer doesn't even qualify for a mortgage anymore. We've actually had this happen. Buyer doesn't qualify for the refinance. Seller has 2 options. One is to foreclose, or number 2 is to renew and extend. So our seller in particular we obviously were actively working with the home buyer to do a refinance, and they needed to get another job. What happened is they lost their job during the refinance process. They started the refinance 2 months prior to the end. They lost their job and weren't able to get a one immediately. The seller did a renew and extend for 9 months, and they increased the market rate from 4.99, or the interest rate, to the market rate. So it went from 4.99 actually to a little bit higher. She took it to 7%. And so now the seller in that case went and started making like an extra $1,000 a month per month. And the buyer is very motivated in order to get the refinance done. So ultimately, as soon as she got her job, we were able to pull the refinance off and everybody was happy. So
That's awesome.
That's how it works.
Will you walk us through a little bit how you're structured, right? You had said that your education, that you have lenders, but you also do loans. So unpack a little bit on the structure. And then I'd also love to touch on the different agent platforms that you have.
Yeah, absolutely. So the structure is we in the seller financing arena, we're obviously not a lender. The seller is the lender. So we are the compliant vehicle that keeps everybody. I mean, if you're doing usually a primary residence home loan to another buyer, or you're doing an investment home loan, and you need to make sure it's legal, compliant, and enforceable. Then you also need to make sure that that buyer is qualified. You don't want to sell to a home buyer that you need to know what they're going to do. Like maybe they're going to turn your property into a short-term rental, and you're like, I'm not going to do that. Well, you have that right as a seller. And so we make sure that we're super clear and we communicate the goals of the property. So ultimately, it's about qualifying that home buyer and then making sure that it's legal, compliant, and enforceable, and then making sure that the payments go back and forth properly. Ultimately, at that juncture, our job is to create a win-win structure for everybody to have a successful transaction. And so that's really how we're structured. How we do it, who pre-approves the home buyer is either us internally, or we will allow certain lenders if they to come in and get pre-approved to become our preferred lending, and they can promote our platform to their agents.
Okay.
And so that's what we do on that side.
That's awesome. So if an agent is interested, if any agents that are listening have listings and or upcoming opportunities, and I also love what David was talking about, like generating conversations.
Proactive.
Yeah, just
Yeah.
proactively, that farming end of it, prospecting end of it. Any of the agents that want to get connected, they can just go to your site. Do they get a demo? Is there a consultation that happens?
Absolutely. They just go to More Seller Financing, MORE, sellerfinancing.com, and it says book a call on
Okay.
The button follows you everywhere.
Yeah. Is there a button that says from entitled?
Were you
Not
referred
yet,
by?
but there
Referred
could be.
by. No. That's awesome though, because I feel like the access to the information, nowadays you got to almost provide every avenue, the anonymous avenue, the direct avenue, and all points in between for people to learn about something.
So true.
Yeah.
So true.
And the important part is just more options, right? And whether they take that option or not, like you said, one in 100 introduce, but 54% of them sign up for the program, which to me, for a seller, I'm actually surprised at that. I would see more buyers. Let's go out and at least ask them, right? We don't even know if that property qualifies. Like I'm picturing someone, hey, we looked at this house a long time ago. We looked at this floor plan. We love it. It works for me, my wife, my family. There's none in there that's listed right now. Realtor A, tell me how many of those floor plans are in this neighborhood. There's 22 of them. Go knock on their doors and see if this is an option for them. Because I'll say it personally. I'm not selling because I don't want to give up my rate.
Right. Absolutely.
I mean, if my rate was 7 or 8 right now, I'd probably be in my third house in the last 12 years, not the same one. So I wouldn't even know it's an option.
Right.
Yeah.
And frankly, what we would show you how to do is when you sell on seller financing, and let's just say you're making $2,600 a month in arbitrage, you get the down payment you need in order to move on. Let me back up. We will pre-approve you as a seller first to make sure that what are your goals and needs.
Yeah. Where are you going to go? Where are you going to live?
We'll do what?
Where are they going to live? They got to find a place to live too.
Yeah.
Yeah.
Exactly. And then we're going to back into the seller financing offer and make sure that if in the event that you move forward with seller financing, that it's not going to impact your ability to move on.
Right.
And so that's step number one. Step number two is, well, if you offer a 5.5% interest rate, now you're making $2,200 a month after you got the down payment of, let's say 20 or 25 or 30%. Quick caveat. We don't recommend seller financing with anything less than 20% down, by the way, for all the obvious reasons. And, but you're making $2,200 a month, but you go now we get you a 6.75% interest rate minus 22 or 6.5 minus $2,200 a month. Your actually effective interest rate is below 4.
Yeah.
On your next home.
That's
during
awesome.
that seller financing period. So
that is such a fantastic option.
Yeah.
I mean, talk about working the numbers.
Yeah.
I love
Might have
that.
to start looking.
I mean, as a mortgage banker, I currently have a 2.125% interest rate. I can currently sell my house at a 5.5% interest rate and go move into the same home, and the spread covers 100% of what,
the new payment.
What my mortgage would be.
That's amazing. That is brilliant. That's pretty cool. Sorry,
I'm mind running.
I'm like totally
on,
like
I need to call my wife.
I'm totally.
I'm gonna step away.
I know. I'm totally math geeking right now.
Yeah,
I'm so math geeking. That's awesome. Let's move a little bit into the advantages for realtors. I know that when we met, I love that you were like, hey, we can help them in a one-off, but you also have kind of programs and memberships for agents if this is something they really want to focus on, which I almost think parlays a lot into what you talked about. If an agent's out there proactive, there are benefits for them in terms of working with you guys, right?
Absolutely, Bernie. And yeah, thanks. So what we have here is we built an agent-centric model, and we believe that agents should be compensated not only for obviously bringing transactions together in the introduction, but when you have a couple of different options. One is lending. So one of the things that we did is we partnered our seller financing specialist program, which is a designation, with a dual agent license program on mortgages. So what we did is we partnered with a federal savings bank. And most agents, what's going on right now? They're closing far fewer transactions. than they used to, and they need to ideally either close more transactions, which more seller financing helps with both buyers and sellers, but B, they also need to make more money per transaction. I mean, we all want to do that. So ultimately what we did is we built a platform that an agent can only go through 3 hours of compliance training with 1 hour of technology training so that they can do everything on their phone, and no test. And then they're going to get paid 50 basis points of that loan. So on a $500,000 loan, they would make $2,500 in compensation. And so what we were able to do, and they're not looking at credit reports. They're not pre-approving anybody. All they're doing is referring the Federal Savings Bank and saying, hey, look, I understand you're already pre-approved. Look, when lenders compete, you win. Would you like for us to go ahead and send over, we partnered with the Federal Savings Bank. Would you like for us to go ahead and send over our loan application link? It does have my name on it, so they know where it came from. And actually, in the event you move forward with it, I will make a little bit of a commission, but that's not what's important. What's important is you have 2 lenders that compete for your business so that you get the best transaction. If that happens to be with our lending partner, great. If it doesn't, no problem.
No big deal.
I want to make sure that you have lenders competing for your business.
Yeah.
And so that's really valuable because also not only can an agent get paid on the buyer business that they have, but they also can get paid on the refinance business. And if they've closed any homes over the last 3 years, those are all refinance opportunities. And we also have an internal sales team that will call all those refinance opportunities if they'll be able to upload their database into, we use Fellow. So a lot of agents use Fellow. So we utilize Fellow, and then that agent would just give us access to their Fellow, and our call team will make calls on behalf of that agent.
That's awesome.
So that's a very coordinated.
No, I feel like you've really thought of a platform, I think, that addresses a lot of the different nooks and crannies, right? Because so many times people are looking for a solution that just closes a deal, but there's so many other rabbit holes to go down to make sure that you're really providing a great solution.
Yeah.
And, you know, every time I talk to you, I get to hear another little nuance. I think that the outreach platform that's really powerful.
Yeah.
Thank you.
Yeah,
it is. And for Entitled, I mean, so we also charge, so we do charge a program platform fee.
Okay.
It's an annual, it's $2,500, but for Entitled, as long as they let us know that they came from you, we'll give them $1,000 discount. So
Nice.
it'll be $1,500 per year.
Good job, David.
And our platform, what we do is after they close 3 transactions, whether if it's seller financing, or conventional lending, whether it's a purchase or a refinance, if they close 3 transactions in 1 year, we will refund the $1,500 back to them as a bonus on their 3rd transaction.
Very cool.
And we're in all 50 states with both programs.
Okay. I was just about to ask you about your coverage. I know you said all states, and you're out of Austin. You know, that's kind of home base for you, right? Is Texas.
Yes.
And you've been operating this platform for how long already, and what's your most established state?
Yeah, 2.5 years is how long we've been at this, and then Texas is our strongest state given that it's in our backyard.
Well, I think this is a kind of a cool land grab too, because from our conversations, this has been not real leveraged here yet in Arizona.
No, it hasn't. Matter of fact, we onboarded a team yesterday, and he said, Ryan, am I actually the first team to get onboarded in Arizona? I said, you actually are. And he said, I'm going to use this to just expand this program, because we did also build a referral revenue stream in it as well. So when somebody introduces another agent, they're going to get paid on that agent's production. It gets assigned to them, and then when they sign up,
that's great.
Get a little bit of an override, and it does not impact or hurt the client.
Well, we would love to have you any kind of educational in front of agent opportunities here in Arizona, whether you're traveling out here or we coordinate a Zoom of some kind. I think that it'd be awesome to. I've been trying to do we've been doing some of the one-off connections, but I think that, very, very opportunistic to get to understand the program for sure.
Well, and I definitely want to, have that happen too with realtors, because we're not covering everything they're thinking, right?
Yeah.
And I'm sure everybody out there's got some great questions, especially how many new agents out there, you say there's a bad taste for seller financing, just the verbiage from back then. Well, there's so many new agents now. It was like
Yeah.
when short sales were a thing and agents were saying, well, what's a short sale or what's a foreclosure? You know, people, there's so many new to the market, so it's all good.
Well, and I also think too, when you think about, you know, how long ago it was that we saw 3.5% interest, there's some people that have been in the industry that never saw that. And so when they think that 8 is normal and then you can show them 4.99, they're just like, holy cow, that's amazing.
Yeah.
Or thereabouts, right? Whatever that number ends up being. But Ryan, is there anything else you can think of that we didn't get to touch on? I feel like you've done such a great job giving us a good high level overview.
No, Bernie, I think that's really it. Other than, please reach out. I mean, go to moresellerfinancing.com, click book a call. You'll meet with my sales team, and we have 2 different programs, whether if you're looking to just roll out seller financing on one of your current listings, or you'd like to become an agent partner. So,
and you are correct. When I was on the website, that book a call, it literally follows you everywhere on the screen. I'm scrolling, I'm going to different, book a call, it's right in front of you.
And, for some folks, it's over, they want to hear it again. There's a little 1-minute video too, right on the front homepage. You just click that. It's 1 minute long. So,
yeah. Well, this has been awesome. Very grateful. Thank you so much for joining us today.
Yeah. Well, can't wait to set up some more meetings with you.
Yeah, for sure. For sure. So you guys, thank you. Ryan Leahy with More Seller Financing. And thanks for joining us on Entitled.
Thanks, everyone.
Absolutely. Thank you so much.